Hey guys, Boris Schlossberg from BKT. Good to be with you again. So I see that last week everybody seemed to have loved how to buck the trend video. This week I wanted to go into more detail about the whole idea of picking tops and bottoms with proper levels. Because the key to our strategy here is not only to basically buy oversold or sell overbought areas, but to do it within very proper context. Those of you who remember my old level setups where I look at the 00 handle and the 50 handle as key areas are going to understand exactly what I do with this particular setup. Remember, just to review, this setup basically does the following. On a 5-minute chart, whenever we have two candles that walk outside the 2 standard deviation Bollinger Band, that provides us with a signal to buy on the short side, or if it's on the other side, a signal to sell if it's on the long side. However, the critical filter that I always use, I don't do this blindly because any strategy you follow blindly is always going to lead to ruin. The critical filter that I use is that it must also not be within the key 00 or the 50 levels. So, in this particular example, this is a pound dollar I traded earlier this week. Notice that the price goes through 38 handle and drops all the way to 37.80. It's only at this point that it becomes an interesting buy. If you had two red candles right at the 38 handle, I would still not be a buyer of the price at this point. Mainly because remember, whenever prices get to the 00 handle, there's a huge amount of stops resting there, and typically the moment they bring it down there, they're going to cascade them all the way through for at least 15 to 20 points forward. So it's very, very stupid to simply just say, oh, it's overbought or oversold, I'm going to be buying here. You have to give yourself an awareness of where the price action is relative to these levels. The good example of this later on in the price action, as you see, is the 37.50 level. Over here, again, I do not buy the 50 level. I actually buy all the way down to like in the 40s. Snap it back up. It goes back down into the 40s. I snap it back up. It's actually a trade I made twice in the same period of time. Mainly because it fell through that 50 handle, gave us the cascade, and gave us the opportunity to trade it forward very nicely. Let me show you the key thing on the Euro chart. Okay, bear with me here. I'm going to go backwards to the Euro chart and show you the situations where this trade strategy does not always work and what you need to do in order to kind of stay tough in the trade. Here's an example where price action goes through the 28 handle. Let me just mark it up for you so you guys can all really see it nicely. Oops, hold on a second. I'm sorry. Okay, so here's the 28 handle. Price action goes through 2 bars, right? All the way to 27.80, which is a reasonable place to buy. I buy, and boom, I get stopped out because the price action still has a little more downside action to go. At this point, the key thing is not to sit there and cry like a little baby, but to actually go back into the trade, because the next trade, which is, you can see right over here, I buy over here, turned out to be very profitable. So the whole idea here is sometimes you can pick the bottom, sometimes you have to give yourself 2 tries to pick the bottom. Very important thing, by the way, is not to simply randomly keep buying. You want the candle to complete. Notice that, for example, over here, the candle completed before I bought. Because what can happen is that the price action could simply just cascade all the way down, and you really need to make sure that all of the flush comes through before you're willing to step up and make the trade. But the key thing is, once you're determined to make the trade, you got to step in, because if you blink, you lose. This is a strategy where you have to be very prepared to act quickly, cut your losses quickly, and take your profits even more quickly than your losses. Typically, on a Euro trade, I basically have a 12-point stop with about an 8 to 7-point target. On the pound trade, I'll have a 15-point stop with a 10-point target, mainly because of the spread differentials. Last thing is, I really want to trade the spread pairs that are the most liquid. So Euro dollar, pound dollar, and dollar yen are the only pairs that I'm going to trade this strategy with. And just to show you, this is an example, if we go forward, on the upside, again, it goes up, I got stopped out. You can't quite see this, but there's a red circle over here. I got stopped out, I go right back in, make money, go back out, got stopped out, go right back in, make money. The key thing, again, I want to emphasize here is that it's okay to go twice into the trade. But if you get stopped out 2 times in a row, something is going on with price that you should be very aware of, and you should step away. That means typically there's some kind of a statistical fluke going on, that the price action is outside of the bounds of the norm. and it's much better to simply walk away and restart the setup on a different time frame, at a different juncture in price action, because generally this setup should be accurate 7 times out of 10. If you get 2 consecutive stop outs, something is going on and you should step away and re-examine what's happening. Last trade I did here, I just want to show you. Where are we? Where am I? I'm in, okay, so here we are. This is early Asia. Again, I want to show you the importance of levels, right? So this is the 29 level. Let me mark it up again just to see that you guys see this. Okay, here's the 29 level. Notice the price action walks the outside band for 2 or 3 candles, but I do not buy it. Why do I not buy it at this point? Because I know they're very close to the 29 handle. They're going to want to try to run the stops. The moment they do run the stops, that's when I do step up and buy it. I buy it right around over here. Because it's Asia, I'm willing to take a little bit more of a risk, so I bought it at 95. It bounced back up. It actually bounced back up much further than what I took my profits on, but it doesn't matter. The key thing here was simply not to be greedy. The key thing here was to simply take the trade and make it go. This trade actually is not in my equity curve, but I want to show you what the equity curve on this thing looks like. And as you can see, it's a very grinding out kind of a strategy. You go up, you go down a little bit, you go up. As the week progresses, I got a little bit better in terms of handling the timing, and it tends to be producing a very relatively smooth equity curve where you're up with a few retraces and up, and it keeps on building. So, bottom line is, can you make money in the currency market trading tops and bottoms? Yes, but you must be very disciplined, very controlled, and absolutely not greedy. This is Boris Schlossberg. I'm wishing you the best of luck for BKT. Over and out.